All right, everybody. Thank you so much. Appreciate the opportunity. I was really busy this morning. I started the room today. We do twice a week, and we've done about so far probably if I call an exit on the Nasdaq, will be over 1,000 ticks just for today. So the idea, folks, is to learn how to use volume profile in favor. And I see some of my students there. Thank you very much, folks, for coming in. And achieving 1,000 ticks per month, it's really not that hard if you learn how to swing trade with volume profile and the indicators that I've created throughout the years. Before we start, let me introduce you to a few things that you should be aware of. This is the website, and the idea is for you to go and learn a few things. Besides this webinar, there's a lot to learn, and I'm giving it away for free. Some of it is for free. If you go to the resources, go to education, there will be a section where you have videos, okay? This is a previous webinar that I've done, similar to this one. But this one here is very important for you folks. It shows how we deal with volume profile, swing trades, what are the indicators, and why is it really not that hard to achieve 1,000 ticks per month. In fact, this month, if I call an exit now on the Nasdaq, we will be about maybe 4,000 ticks so far. The idea, again, is waiting for the good opportunities, waiting for the swings, looking at bigger time frames. You can use the same methodology for scalping too. So this video is very important. Okay, please watch it. It's under the education section. However, I usually joke about this, but I really mean it. This video here, adult ADD and how it manifests itself in traders, it's one of the most important videos that you need to watch. It has nothing to do with me or with my methodology. It has to do with your mentality as a trader. This has been done for us by Dr. Kenneth Reed, a specialist, about, I would say, 8 years ago. Yeah, about 8 years ago. It's still valid. It's still very, very good. Another video similar to this was done a couple of years after this. It was, let me show you. It was done by Dr. Kenneth Reed as well. It's here. It says mistakes traders do and you should be aware of. Okay. Other than that, we have beautiful traders. It's beautiful videos. The method, the DRL indicator, the new indicator, great, and how it works. Pressure-based indicator. So the indicators that are designed and used by me and my students are mostly based on volume profile. Furthermore, to learn more about the indicators in details, go to the main page, thetraderinstitute.com, check out our YouTube channel, sign up or become like follow us there. But there's a 50-minute video here. It says TTI main indicators. Okay. Of course, I made some recap videos. Here's a video where I caught 2,000 tick profit in one day, in one trade. Secrets, which is already posted on the other page, of swing trade calls. You know, it's something very, very nice for you to see and follow and understand. Okay. Today, before I start, I will show you a few things. The main idea will be education and learning, but let me show you a couple of things. Let me get rid of a couple of spots on my screen first, please. Okay. When you become a full member with us, we have different options, but the main option is becoming a full member. When you become a full member, just let me emphasize on the fact that today I'm not selling anything, okay? Because we don't sell anything at this time. I'll show you the process. before I indulge in the education. We will have enough time to educate you on the way we look at the markets and the way I call trades and how I trade. When you become a member, there is room links that you can access. There is levels of education starting from level 1 all the way to a much more advanced. For example, if we go to level 3, advanced volume profile, there are videos. One of them is crash course on volume profile. This is huge. This is your main video to watch. And there's how to use it on spot market, on the spot market and futures market, and we have recorded trainings, etc. Okay, through this is your back office. You have a lot of power, okay, in your hand. You could view, you can ask. In terms of the main platform, folks, we are using, and I'll explain why. We do use Sierra Charts. Sierra Charts is very easy to manipulate, easy on your computer. It's not very really heavy. Look at the amount of instruments that I'm looking at or trading. Okay, for example, Nasdaq. I'm looking at CFD Nasdaq, NAS 100. Okay, NAS 100, which I called it long earlier this morning because of this indicator that showed up, which is the SAL indicator, the magenta line, very powerful. We caught about 600 ticks runner and 200 ticks on the first target, so 800 ticks already up, and now we are holding another trade for 300 ticks on the Nasdaq. And then you can also look at Nasdaq futures. Look, this is futures contract. Okay, same thing, and this is my final target, about 2,000 ticks if it goes up. So it's not really hard to say that we can catch 1,000 ticks per month. Okay, August was very hesitant, was very bad, but still we managed good profits. Usually August is the time where people take vacations. So here's how you become knowledgeable and join us and learn for free to start with. If you join the website, if you go to the website, first page, which is the home page, okay, there will be a link, says free access now. What is this link for? This is for joining our Telegram channel. And here's the Telegram channel. Okay, we have a channel, which is, no, you will join this one. You will join something called Welcome to TTI. This is for free. We will give you signals. We will give you follow-up. We will give you recaps, and we will give you invitation to the rest of the channel. So basically, once you join here, you will contact us and you'll tell us, okay, I like what I see. I want to join the rest of the channels to try you guys, which means you're going to join the indices, the elite, the gold, oil, Forex, and even Bitcoin. I don't do a lot of Bitcoin, but again, I cannot trade them all, right? But here, I mean, you can join all of them, plus you will be joining our room too, okay? Which is twice a week for now. Watch the videos, learn, understand what we do, and I'm sure you will enjoy it a lot. Next is, today, we are going to look at this thing. Give me a second. We are going to look at this thing. When I started, I would say about 19 years ago or so, I started with hope that, you know, I could find something easy to do. To my surprise, this was not easy, folks. This is the toughest business you can get in. People think it's easy, it's not. However, throughout the years, I kept making it easier and easier and easier. In 2005, I spent really 6 months locked in my office, basement office in the old house, trying to learn about this. I have a physics degree, so my main thing was numbers and math. I learned about it. I learned a lot. Since then, we came a long way. I don't look at the ladder anymore. I don't look at the bid and ask ladder. What I look at is basically the volume, and I created a special indicator that will show you exactly where the market wants to go and where it's supposed to reverse. And I'm saying this with extreme comfort. That's why when I'm telling you come join us, I'm not selling you anything. You come and see for yourself. Okay. Um, Reading about me elsewhere or hearing about me elsewhere, um, it will not help you. Although I'm sure if you talk to my members, they will say excellent, amazing. But I want you to see for yourself. This might not be for you. You know, some members do not like to hold for 2,000 or 1,000 ticks. So therefore, I want to do an advanced lesson next week for them to show them how can they hold for that long using different instruments, etc. So it's not for everybody. Therefore, we offer free trials. If you see this, this is a picture from 2006. I was already giving out, seminars and webinars, seminars outside in a classroom style. This is in Brampton. This is in Mississauga, Ontario, if you're familiar with the place. This is Colorado, Denver, 2012. And by the way, I have students from these that you saw the pictures. I have students, they still with me. I have my main students, my major students my oldest students are from 2004 classes. Okay. And I see, and you will notice a lot of testimonials I have in the members area, and all these testimonials are from students that you will actually come and see and meet. You just join for free. You see this? I got a note yesterday saying Simon, insane trading. Where? Here. This is insane, great trading. And this was yesterday. Today we got another insane call, and it's still holding. So here's the main focus. The main focus that I want you to focus on when you want to learn to trade, or if you're a trader, I want you to focus on these things. You have to ask yourself, can I anticipate the market's next move? How successful am I in anticipating the next move? Right? How accurate am I? How often the market goes against me and I'm anticipating the different direction? Do I confirm my trades? How can I confirm my trades? Am I confirming with technical indicators, or I'm really seeing the ins and outs of the market makers and their intention ahead of time? Believe me, folks, if you cannot see the market's intention ahead of time and their contracts coming in, whether buying or selling, or the volume, you are not confirming properly. And then execution. Am I executing correctly? Am I trading correctly? Am I trading at a perfect price where my stop loss is known ahead of time? Do I have a smart stop, or my stop loss is random? Am I taking enough profits on the first target to cover the runner? And also you have to ask yourself, am I a scalper, swing trader, long-term, short? You have to know these things. So once you join us, folks, you will be able to learn about us more and maybe decide whether you want to be a swing trader, scalper, midterm trader, or all of them, because the strategy calls for all of them. Okay. How did I know? If you look at the gold today, gold bouncing up, copper bouncing up, silver bouncing up. How did I know from the bottom? If you look at this here, TTI gold and metals. First thing in the morning, today, September 24th, 8:46 a.m. Eastern time, 3 hours, more than 3 hours ago. I said copper, silver, and gold at a big support. See, I said bit. I made mistakes and spelling, but again, they understand because they verbally hear me in the room too. At a big support, we'll try to find entries today. If you look at the time, 8:46 a.m., it was at the very, very bottom of the price on gold, silver, and Hold on, let me show you. This is gold at the bottom. This is 8. This is the very bottom. This is the time when I called it, when I said it's going to be, I'm looking for long. Silver, same thing. If you look at silver, 120-minute chart, this is the bottom. You see the magenta line, folks. It's not something I pull out of my pocket. I do this daily. Okay, look at the copper. Look at the magenta line showed up. Okay, at the exact time I said it will go up. How did I know that? So the direction I know ahead of time because of what I'm using, the instruments that I'm using, the indicators that I'm using, I'm sorry, plus the knowledge of the volume profile. So let's have a practice about this. Let's practice. Let me show you 2 of my major indicators that I think everybody should have without an exception. You should have 2 things without any exception. One of them is the volume profile. Look at the volume profile on the right hand side. This is the NAS 100 or the NASDAQ. Look how it's creating those levels that visually will tell you where the market is going to go. We call the NASDAQ long from the very bottom. The entry was exactly from 70, which was right above here. It did go for about 1,000 ticks. Then the stop loss was hit on the runner for 600 ticks. And now we are already long again from here. We are long again from exactly from here, from the very bottom. And this is designed when the market was coming down. We said we're going to go long from here. Okay, it's posted in here with timestamp and everything. So I'm not doing it just to say something. It's done, and we are aiming for about 2,000 ticks on this. If it happens, it happens. Otherwise, we have a few hundred ticks in profit already. So how did I know this? It's because of the things that I'm using, and I will come in and explain them slowly. All right. So you should have the volume profile. Volume profile, you can expand it, you can minimize it, you can smoothen the edges, you can sharpen the edges. Okay, it's very dynamic, and it works nicely with us. I designed this long time ago. It's kind of available on different platforms, but with Sierra charts it's very advanced. I had a programmer design it for me. You can use it for long term. Look at the weekly. See the weekly? Do you see how it touched the bottom of the channel, middle of the channel here on the down chain channel, also the volume profile, cluster, etc. Okay, so that is one thing. The other thing is your SAL indicator. The SAL indicator called here, studies, SAL, it's Simon's attraction levels. You see number of lines, I have 1. So when I'm using 1 level, it means I want to see the heaviest support or resistance that are available to me in the market, not made by any indicators. It's made by market makers themselves, and I'm using it on NASDAQ SAL or on CFDs or I call them CFDs, but think about them as futures contracts or futures instruments such as the NASDAQ, but in the spot market. It might not be available for Americans to trade yet, but it's globally known, and people love to trade CFDs. Similar to Forex, it's very similar to Forex. Exact same market, same brokers will offer CFDs and Forex pairs like USD pairs and others, pound pairs, etc. Because we are doing the same. So the other indicator is the SAL indicator, and you can not only use it for one. If you look at this here, you see how the SAL indicator, I used it on this futures market. You see how it bounced down from here. You see magenta line. You see magenta line. Okay. You see magenta line at the bottom here coming up, and this is a major support. You can use these also for scalping. So you can use it for scalping and swing trading alike. If you are not a student, you might have a lot of questions. Therefore, folks, I want you to join, as I said, the free trials. Okay, it's available to you. I will summarize the knowledge of volume profile, and please, I want you to pay attention to this. I will summarize it in a very simple way. You see this? You see the side volume profile? Let me be a little bit more clear. You see the volume profile on the side here? Okay. This gives us a few things that we need to learn. It's very simple. Let's assume, and I will give you an example of yesterday's call on RTY, the Russell, and also today's call on the NASDAQ. Same thing. So the market is coming down fast. No, not this. This is very thin. No, very thin still. How do I make it thicker? No, let's keep it this way. It's okay. It's okay. It's fine. So market is coming down fast, dropping. But I have a level, which I will not talk about yet. But you are looking for a retracement, for example, and you're looking for a short. So your retracement, for example, stopped here. Now you're thinking, oh, I want to short it here, because you have a level here, which is a Fibonacci level, for example. And you say, okay, I'm shorting it now. So you take a short and it goes against you, stops you out, and then moves down. Now you got stopped out. You have a stop loss lost. You don't know where your stop loss is, so you do, because you do, not you necessarily, but generally speaking, you do random stops. You don't know where your stop loss is, random stops. So you get stopped out, and it comes coming down here. You say, oh, it's gonna, hell, it's gonna break down. Let me do a breakdown or breakout short. You do a breakout short here, boom, it goes up. It goes up. You say, okay, it's gonna come back down to this level, but this level did not hold. What do? I let it go. It bounced down, and then you, oh crap, it's coming down. You stopped last. You got stopped twice. Now you're gonna say, okay, let me try it again. It's coming down, and you short again, and it goes back up. And it happens to everybody every day. I'm not making this up, folks. However, let's go back slowly and examine this. Market is coming down and you want to short. But hey, we learned how to read the market ahead of time, because the volume profile told me it's going to come back down short due to this. You have a continuation zone. The volume profile is telling me something. Sorry, that's a crappy P. Volume profile is telling me something. It's a continuation zone short. Are you gonna take a long here? Look at where it is. It's still continuing. You will not take a long, because you know if you take a long, you're gonna be stopped out. So what are you gonna do? You wait at the bottom. Now at the bottom, you have coming up another continuation zone, which is very common, right? Folks, what I'm telling you here is really amazing. It's free education. Take it, learn it. You cannot find this with your regular trade, indicators. And here you have a level, an area that called rejection. So this area, this whole area is rejection. So as a smart trader, ahead of time, you know that your entry should be from here. I would call it green, from here. This is your entry, execution. But as a smart trader, tell me, is your stop loss going to be at the burgundy area or at the blue area? Now, all of a sudden, you know, heck, if it comes to the burgundy, it's going to continue down. You know that because you learned that this whole thing is a continuation zone. So burgundy stops me out. That's fine. It's a very small stop, but most likely the market is going to come back down and then go up. You take first target T1 out, which is almost, I would say 90% of the times, 85%, T1 is very, very easy to get. We go I call trades on 3 contracts. We take 2 on T1. So if you get 50 ticks, you made already 100 ticks. And your stop losses could be maybe 20, 30, 40 ticks. I'm talking about big runners sometimes. You can use the same thing for scalps with 5, 6 tick stops, which we used to be my specialty back in the days. Okay, but I find scalping is hard on me now, and it's hard to type scalps in here. By the time I type it, it's gone, right? And you see me typing here for bigger trades, all of them, see? And people follow with pictures and everything. All right. So you take first target, stop loss remains where it is, and I will tell you, and you would know once the market moves in a certain way that it goes higher to a certain level of volume profile, it's going to be very hard for it to come back down and take you out. This is when you move your stop loss to break even and start locking profits. We call them smart stops. Okay, folks, the idea is very simple. It will not look simple when you first join, but we have a full members area, we have videos, you have me, you have live sessions, right, that we do twice a week for now, and you have a whole bunch of students that you could also ask and mingle with. Okay, look at this. It's really nice environment. I like it. It's very good. They talk, they chat, they make hundreds of ticks. So the idea is that volume profile is key. And then you have also the SAL indicator. Now, one of the reasons why I told everybody my NASDAQ target is going to be here. This is a 2-hour chart, folks. This is not a small chart. If I go to a 1597 tick chart, small chart. Oh no, that's not clear. This is clear. This is about I would say 3,000 tick move. Why did I say my target is here? Because if I look at my main attraction level on the NASDAQ, which is on the other computer, I'll take a snapshot of it. I'll share it with you. Hold on. I'm taking a snapshot, and I will share it with, welcome to TTI. All right. You see this magenta line? This showed up 2 days ago when NASDAQ was coming down. This is a 2-hour chart. So this is my final target, about 2,000 ticks from the bottom. I'm choosing this final target because although I see it going up to this target, to this magenta line, because it's our main attraction level from the SAL indicator. This is not me talking. This is the market makers, folks. It's not me. Market makers decided to have this. So I'm seeing it ahead of time. Although I see this, but there's a resistance in the area that it might bring it down for a little bit of a retracement. So, why not exit here and try and get back in later? Okay, because it is very important to know not only market makers' intention, you also need to know your volume profile and the trend and how it moves. Look, it bounced earlier, okay, from here. It bounced again today from here. Did that deter me from not getting in? Oh no. Why I was insisting on the same level? Because look at the magenta line at the bottom. This is the magenta line that you saw earlier on here. This is a target. This is your attraction. The one you see here, this is your major support. Look, so it did not move. So the market makers did not pull out their intention or their pressure. It's still there. It stayed there. Nothing changed. Everything still the same. So I called it from the very bottom. Actually, if the call, if you look at the call, I will go there. This was yesterday. Today, NASDAQ. By the way, read this, please. Read this carefully. Before I called at 9 a.m., 9:06 a.m., I said, NASDAQ possible swing long soon. So I'm giving you ahead of time, a heads up. And then I said, stop loss will be at this price. What does that mean? I know my stop loss way ahead of time. It's the examples I gave you. If you don't know volume, if you don't know how the market moves, you need to learn. You need to stop now and find somebody or find something to learn how the market moves so you can anticipate it ahead of time. So I'm anticipating the stop loss to be here. This is my stop loss. Okay? So at 9:10, so it's 4 minutes ahead of time, I'm giving you a very big swing trade. I said, let's go long NASDAQ now. Target one, this is target one. So I said entries at 10:0670 are good, or below even better. Then I said move stop loss to, because we took first target immediately, 80, 100 ticks, we took first target immediately. And I give you also Dow, major support now. See, look at the Dow, major support, and the Dow moved out from the bottom. If you look at the Dow now, I'm looking at it now on the other side, it moved about 100 ticks and more from the bottom. It struggled, but it did not go below this level. Now it's back up, okay? And also, NASDAQ, here, see? This was the reason why I showed everybody, okay? Also, I showed you earlier, gold, the metals, all of them moved up. So in a nutshell, folks, if you cannot see, if you cannot predict or anticipate the market's move ahead of time due to the volume and market makers' intention, you need to do the following. I mean, now, you go get your free access to our Telegram channel right now. Download Telegram, get it. Email us if you want to. Contact, email us. Okay? Go to the resources. Go to the education section. Learn. We have a lot of videos here to help you out. I explained this earlier this morning, first thing. Okay? You really need to do that because, I mean, first of all, even if you don't join us, just being with us in here, you will learn so much. I'm sharing a lot of details here, sometimes videos. This is the channel that you should be joining. Okay? Telegram is very easy to use. You can put it on your cell phone, on your desktop, and you can communicate with us. You can also, private text me, private text Daryl, and if you become a trial member, we're not asking money from anybody. I'm just letting you know that you can try us out, and you can also, for 2 weeks, I don't know the exact number that Daryl will give you, maybe 2 weeks, maybe 3 weeks, I don't know, but you will become a member with us. On a trial session, you can mingle and chat with the other members, full members. Some of them are with me for 10 years, 12 years, 5 years, 4 years, okay? And we have the Forex, we have the oil and nat gas, gold, silver, and copper, okay? Indices, all of them. Indices, when I say indices, we do uh, futures mostly, but sometimes I would also emphasize on the CFDs, okay? And I will open shortly for questions, but for now, I'll show you. I look at, for example, pound. The pound, I called it recently long, but it's in the positive. Yeah, pound US, it's in the positive. You can take this in the pound futures. It doesn't have to be pound US Forex, but we have the pound yen. Look at the magenta line and look at how it moved. It's in the positive too. But Forex sometimes it struggles. Now, questions. You folks have questions. I have answers. Registration for my just go to the futures. Sorry, go to not futures contracts. Go to this. Go to the traderinstitute.com, and everything is there. I'm sorry, not this one. This is education, sent to all, and this is the entry level. Access our Telegram. Okay, I sent it to everybody. The registration link, TJ, it's right on the website, thetraderinstitute.com. How do you do? Yeah, traderinstitute.com. Hi Simon, who do you use Sierra charts with? You can Sierra chart. I go directly, Donna, to Sierra chart people. Sean, yeah, they are dynamic. I'm using volume profile only, volume, and even the indicators that I picked to show you they are made. They are based on volume, math, and volume. How to register to Adrian? Once you join that, once you join this channel, guys, everybody. Once you join this channel, welcome to TTI. We will tell you. We will give you the information. We'll every day or every 2 days we will give you like, hey, contact us here to join. Sean is asking, do you really do 1,000 ticks per month? Yes, easily. I'm very comfortable with that. Sometimes I would sit for a week without any trade calls. 5 days, 4 days without a trade call. Because I only pick the good ones according to the basis that I showed you. Again, that doesn't mean that you should just do what I do. You can still do your things. Add this to your arsenal. What you win? I don't know really, Serge. What I have is I pick the highest probable trades. I had a couple of stops, very small stops this month so far. One of them was on the nat gas, I think 33 ticks on 3 contracts. The other one was a trade that I did on the NASDAQ. It took me out with about maybe 30 ticks on the stop loss. But we've had almost, I think, 4,000 ticks. And Hermes is with me. He trades the NASDAQ. He says I am over 800 ticks today so far. Yeah, and because he's following my calls. Good job, Hermes. Thank you. Will be there. Yeah, there will be a recording. And if you guys missed anything, just go to the website, thetraderinstitute.com. Go to the resources, education. Okay, I posted these things here. We have a lot of videos, and you will learn a lot. What I offer, you don't expect to learn it in a day or two. It takes weeks to understand it, maybe 2-3 weeks, until you get, oh my God, this is what I should be doing, because I cannot be trading randomly without knowing my stop loss. I cannot trade randomly without anticipating the next move. I cannot trade randomly. If I miss the trade, I still insist on the same direction. Okay. Sean, just go to the website. Free access here. Just go to the website. Or you know what? Just email us. Here. I will give you my email address, okay, everybody? Or even Daryl's. I'll forward it to Daryl's. Daryl. Just 1 second. Here. Just email us. Rank, it works on everything, Antonio. But once you join us, please do me a favor. If you join us, try and cleanse yourself from anything that you learned in the past. Focus with me on this, and then you can add your stuff after. This is unique. To us, it's not. We've been doing it for many years. But there's a reason why when the market moves, we try and capitalize on it. Today, I missed a trade call on the Dow. The Dow was a massive long, okay? Hermes is saying Simon's #1 strength is patience. Thank you. Donna, yes, absolutely. Anything you need, just join us. Look at the Dow. And if you look at my call on the Dow, I missed it because I got the Nasdaq. Although the Nasdaq is much more powerful and moved hundreds of ticks in favor, but the call on the Dow was there. I mentioned. Look at the here. Russell. Look at the Russell. If you see the Russell, exactly bounce from that. If you see the Nasdaq, bounce from that, and here's the Dow. Major. I said major support. Look at this. Okay. If you look at the actual price, look what happened. Look at gone up about so far over 100 ticks. Okay. I hear you are very genuine. Yes, thank you, Sean. I mean, go to the website. Being genuine or being honest or whatever, it's something that you should decide once you join us. Again, as I said, first thing, I'm not selling anything. You will decide whether you want to join or not. No pressure, believe me. And I have one of my main students, which is Daryl. He joined me a few years ago. He must be the nicest person that I've met. So chat with him, talk to him. Yes, you can use 5-minute charts. Yes. What browser do you support for? All browsers, I think, work. But again, this thing here, basically is you can do it on your telephone, on your smartphone, the Telegram. Okay. So yeah. Any more questions? I have 3 more minutes before Anna kicks me out. Did I miss anything, folks? I was not looking at the questions before. Jeff, oh, he's saying, where's the pound yen going? Okay, pound yen. Pound yen, it is supportive between this price, the magenta, and maybe a bit lower. If it comes back even a bit lower, the magenta line should move with it, but it is supportive. So I have to look at the other side to tell you, but it is supportive. Okay. I use CR charts. Ninja Trader 8 I don't touch. Ninja Trader I don't touch. It cannot support all these. Yes, we do have students who use Ninja Trader. They're switching to CR charts. You cannot basically support all these. And my main indicator, which is SAL attraction levels, do not work with Ninja Trader. You have to have a third-party indicator, such as Jigsaw. You have to buy it separately, but mine is included. Like it's part of the membership too. Okay. Yes. Excellent. Did I miss anything, folks? Is there anything to opening? No. TJ, what I do, I look at markets ahead of time, 8 o'clock, 9 o'clock, and then we start at 9 o'clock. After that, 9:30 is the market movement. I watch out if I'm long or if I'm short. I'll try and move my stop loss. And then my main market moving time, my main swings, usually, except for today. Today we had a very good swing in the morning before even the market opened. Usually it's 10:30. This is when the market makes a decision whether to go up, down, the trend. Okay. The cost of the membership, as I said, I'm not going to sell anything. You can talk to Daryl after your trial. If you like it, he will design something for you. Sean is saying, wow, Simon, you have really opened my eyes. Thank you, Sean. Thank you. That's a very kind thing of you. Looking forward to seeing you in the room. Excellent. Serge, thank you. Thanks, everybody. Appreciate it. Hope you folks enjoyed this, and I will see you in our trial sessions.
Thank you again for Anna for the invitation here today, and thanks for everyone for participating with us. Again, my discussion today is going to be on what we call our market maker levels. This is one of what we call the secret trading levels of a veteran floor trader. Now, again, that sounds kind of salesy and hokey and stuff like that. And it's more kind of really the truth here. And I'm going to show you as we go through this why we call that the secret levels and things of that nature. But before we get started here, let me go through by way of introduction here. My name is Jason Love again, and I'm the founder and lead trader here at the Oil Trading Group. That's me graduating from high school all the way back in 1987. I've got a 19-year-old son now, and he tells me that the mullet is coming back into style. Well, I guess I would have been a hit back in those days, right? That's me a few years later, about a year later, actually, after graduating high school. I was enlisted in the United States Navy. I am a combat veteran of Operation Desert Storm. And while I was in the Navy, I held a top secret security clearance. And a short 30 years later, that's me today. And again, founder and lead trader here at the Oil Trading Group. We'll be celebrating our 10-year anniversary here, doing what we do here at the Oil Trading Group in October. So again, we will have been doing this for nearly 10 years. Yeah, it's just been about 10 years, and I can't believe how far and fast time has flown here. All right, so what I am going to show you today, does it actually work? That's always the question, right? And we come on here and give our presentations, and that's really the question, right? I've been on the other side where you're sitting, and I listen to these things, and you go, does this thing actually work? What he's going to show me, does it actually work, right? And so this screenshot that you see here on the left is a screenshot taken from Top Step Trader. Now, if you're not familiar with Top Step Trader, they are a proprietary trading firm, and they provide funding for students who pass their trading criteria, right? Basically a trading interview where you show you can trade, then they will give you a funded account based on that. Now, I use these because we deal with a lot of people in our trade room. And again, like I said, this will be a 10-year anniversary here coming up. And so we deal with a lot of people who have, candidly, they're underfunded. And so these prop firms that are out there, while a little bit difficult to pass their criteria, they do provide underfunded traders, if you will, or traders who are trying to learn something new or really just getting into trading maybe for the first time. They provide them with an opportunity to get capital to trade. So that screenshot there to the left shows you the fastest number of days to funded trader that they had, and that you see there is on the right is me, right? That is a webinar that I conducted to explain exactly how we went through and passed a Top Step Trader Combine in the minimum amount of time of 15 trading days, right? So I'm going to throw a link to the YouTube channel. You can search that YouTube channel if you would like, and you can take a look at that. Make sure that went into, no, that didn't go to everybody here. Give me a second here. I'll put this in here one more time to the entire audience. And there's a link to the YouTube channel. We're going to come back and talk about that YouTube channel here again in some detail a little bit later. But for now, that is the place where that video is located. And you can scroll down. It's kind of towards the bottom of that page. All right. So also, I have done other Top Step Trader Combines over the course of the years. In fact, this is not an all-inclusive list, but it is a list here that I want you to kind of look at. And there's a couple of things that I want you to pay attention to. One is obviously going back to January of 2015, all the way we have on this spreadsheet here to July 19th. And the thing that's probably the most important thing that I want you to look at is we have a very aggressive risk reward management philosophy, right? We are looking to cut the losing trades short, let the winning trades run. That's not new to trading, and that's not new to us, but we think we do a pretty good job. And these levels that I'm going to show you today really give you a chance to be able to take advantage of that. So if you take a look here at the average winning trade, it's $421, and the average losing trade over the course of all of these is $119. That gives you a reward to risk of about 3.5 to 1. If you look at the average win duration of 207 minutes, or sorry, 2 hours and 7 minutes, and the average loss duration about 9 minutes and 58 seconds, that's a pretty good indication that I get in my trades and I get out of them when they're not working. So when I get in and they begin to work, we hold on to them for a long time. When we get out and they don't work, then of course we do our best to get out as quickly as possible when they don't work and in and stay in when they do work. I'm going to send you a link here. I just threw another link into the chat window there. And what this is a kind of a discussion, if you will, on some of our previous trading combines. So you'll be able to look through here and you'll see a discussion on trading combines that we've done in the past. You'll be able to go through and read some of the text and some of the analysis that we've done on these trading combines. So to give you a flavor of what we were doing and how we did it over the course of these trading combines. Now, I run these trading combines specifically in the trade room. In fact, I'm in one right now. And the reason that I do this again is that I want our members to, there's a couple reasons. One is that I want our members who are trying to participate in one of these to be able to go through and kind of play along with me. And then the second thing is it allows me to come back and through an independent source or verification of what we have been able to do or accomplish in our trading room, right? And so this was as recently as, what is today? This was last Thursday, a week from last Thursday. So Top Step Trader puts out an auto-generated when you pass a criteria. This was a something that I just completed just last Thursday, where we got the, obviously you can see the auto-generated letter. You've reached the funded level. This particular trading combine that I was in was, the profit objective was $3,000 at a minimum of 10 days. We did get that accomplished. And again, it says congratulations, as you can see there, on passing the trading combine and reaching the funded level. And as you can see up there, the date was 1 week ago, Thursday, that we completed that process. Also, about a year and a half ago, maybe 2 years at this point, the company Earned a Trade came to us, approached us and said, hey, Jason, we want to talk to your customers about becoming part of our funded trader program. And I said, sure, I'm interested, as you know, the more the merrier. But before I can do that, I need to know that you're going to pay my guys if they make money, right? So I need to go through the whole process from start to finish to see how it is. And if I could come out the other side successfully and then end up trading and you guys will pay me, then I will be more than happy to begin to talk to my customers about your service. And so what you see here right now is a screenshot from a webinar that I did where it was titled From Start to a $5,000 Deposit, My Experience with the Proprietary Trading Firm. And again, this was Earned to Trade. And if you look here, let's see if I can get this zoomed in here, right? Yeah, maybe I won't be able to here. So, well, this does this sometimes when I try to use the zoom function. Let me try this one more time here. See if I can get this to work. And we'll zoom in, and that is not working. So the zoom function not working. Anyway, this is a copy of the bank statement. And hopefully you can see here, right here, where it says there is a deposit of $5,000 into my business bank account from Earned to Trade. So again, something that we did with them and we were successful. Now, before I move on here, I am in the middle. I started a $150,000 Top Step Trader trading combine yesterday with inside of our group, and this was what it looked like at the end of day one, right? So it was a $150,000 combine. Here is the statistics. You can see this is directly from the Top Step Trader website, and there was day one, and the profit yesterday was 52.1870 at the end of day one. I'm showing you these things because, again, we all want to know, does this, what he's talking about, does it work or does it not work, right? And so if you take a look here at my trader view statistics, I had some trades early in the morning, right, and that were kind of up and down. Again, very limited risk and those kinds of things. If you look up here, this is the right here, right? This is the trade in the afternoon. You had two lot start here. We had a two lot trading start here. You'll notice that the gross P&L on this trade, sorry, this is that one trade. The gross P&L up here was 51.87. I started with two lots. I added to the position here once the market went from 64.5 down to 47. Then I added one more lot at 32.31 quarter, and then I covered the entire deal right as the market was closing yesterday at 32.26 for a total here at 51.72. Commission was 14.80. And if you come back over here, I'd had a couple of trades earlier in the day that were small winners, 52.1870. Now I'm going to come back and show you the exact entry locations, etc., of those as we go through this. Right, I'm going to come back and show you how we did. By the way, I see some questions coming in here, and so I will get to your questions here at the end. I have a very limited amount of time, and I kind of want to get through this stuff. So please be patient with me, and I'll make sure to get to your questions as we go through it here. All right. So again, here is that YouTube channel that we just talked about. And again, I don't make videos every day, but what I try to do is show people that those reward to risk ratios are achievable, particularly when I show you these levels that we talk about, that I'm going to talk to you about here today. But you can see here, there was a 14-point ES trade on one lot, 7-to-1 reward to risk. Here was a 7-to-1 reward to risk trade. Here was a 7.5-to-1 reward to risk trade. Here was an 8-point ES trade. And this is that YouTube channel, right? And there's just page after page after page of me going through those same types of things. This is that webinar. This was that webinar that we were talking about, how we pass the top step 1 and step 2 of the top step trader in the fastest time possible. But again, you've got the link in here. You can come through and take a look at these videos. Now, each one of these videos were taken in front of a live trading audience. So the way that I break these videos down here is you're able to go through, and this is, I'll do some discussion on where the trade was and what we did. And then again, I show you here that we shorted the market maker level. Here's your P&L on the price ladder here. I was down ticks here on the price ladder. And again, this is the exact same format that you see going on in the day trading chat room every single day. We don't win every day, but that's trading, right? But what we do is I'm using these videos as a resource to be able to show you that you can hold on for these bigger trade opportunities, and also you have the opportunity to use these levels that I'm going to show you to kind of give you a really good sense of where the market structure is and how to go ahead and participate in some of that structure. All right, so that concludes that portion of, and what I'm going to show you today. Does it actually work, right? And so that is my evidence of it working. And so speaking of working, let's try this again. As all right, we'll try this again. Okay, so before we go too much further into this, our Uncle Sam wants you to know that the CFTC, futures and options trading, has large potential rewards, but also has large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options market. You should seek appropriate advice from your broker or licensed investment advisor before taking any action. Past performance does not guarantee future results. The Oil Trading Group, that's us. We do not hold ourselves out as commodity trading advisors. So given this representation, all of the information material provided by me to you here today is for educational purposes only and should not be considered specific investment advice. And again, with these trading combines, it's important to know that hypothetical or simulated performance results have certain limitations, and you know the rest of the story. If you are interested in reading the full disclaimer, you can pause this video if you're watching it later, and you can copy and paste that link into your browser, and you can get a full picture of the risk disclosures. Now, we call these market maker levels, right? And so it's important to know what a market maker is and maybe was in the past, right? It's a little bit different today than it has been in the past since they've gone to electronic trading, but there is still that term market maker that does apply. Every instrument needs a market of buyers and sellers in order to move the exchanges. Market makers are high volume traders that literally make a market for securities by always standing at the ready to buy or sell, right? They're providing liquidity. They profit on the bid and ask spread, and they benefit the market by adding that liquidity. Now, this picture here that you see to the left, this was the actual guy on the floor in a very flamboyant pose, but this was him on the floor of the exchange, and this is the guy that taught me how to do these levels. His name was Patrick, and he was the inventor or originator of these levels. He was a floor trader, and a floor trader was an exchange member who executed transactions from, wait for it, the floor of the exchange. Floor traders fulfilled an important role in commodity and stock markets by providing liquidity and narrowing the bid-ask spreads. Again, floor traders were also referred to as market makers. Now, these levels were developed in the late 1980s, and they were, again, developed by my trading mentor, who was a 30-year veteran floor trader. In their original form, these levels were calculated by hand. And boy, that's a picture of a trading card. Aren't we glad that we don't have to trade like that anymore? And so despite the changes in the way that trading is conducted today, the logic for these levels continue to work in today's trading environment. So what are market maker levels? Well, the market is continuously telling a story, right? And so you're not just trading in a vacuum. The market is telling you a story from a bigger picture perspective. It's either trending or non-trending. It's trending up, it's trending down, or it's kind of in this sideways pattern or rotation. But regardless of what's happening, the market is continuously telling you a story, and the story provides the context for the daily trading sessions. The market maker levels are the structure points inside of that daily story. So if you know that, or once you have determined rather, and you kind of have a good sense of what the direction of the market is going to be, the bigger picture idea, then these structure points help you make decisions on entries, exits, and targets. Once determined, again, the structure points is used as tactical areas to make trading decisions, right? And so if you have a strategy, this is what I think the big picture context is here today. Then you have tactics, the way you want to attack the market, right? And the tactics can be varied based upon the individual, but the structure points are the reference points for your particular trading decisions, the market maker levels. Now, here's why they work, right? As you see here in this graphical display from a profile chart, the market is in basically a fairly standard pose. The market rallies and then it pulls back, and then it rallies and then it pulls back, right? And so statistics will show you that the market will be non-trending greater than 80% of the time. And so, as you know, markets do not move linearly in nature. The market will rally, it will pull back, and then the market will sell off, and then it will rally. Those rotations create a set of measurements that are then projected forward into the next trading day's sessions, right? So what it's doing is it's measuring the rhythm of the market over the span of time and price, right? So as the market rallies and pulls back and then sells off and rallies, that creates a set of rotations, and those rotations create a set of measurements that are then projected forward. And that's the reason why they work. So again, in order to fully understand why the market rotates, you must understand the auction process and how markets go about discovering what the fair prices are in any given day. So one of the examples that I use in the trade room is when you are looking to try to decide what value is in a particular market, right? That's an important component. You look no further than a real estate market as an example of how the market works, right? And so if there is, the market is gaining in value, right? You're looking to sell your house and you say, okay, well, 3 houses or 4 houses on my street sold, and they sold in a range from this price to this price. Well, when your price gets to that high end, you probably want to be looking to sell so you can maximize the opportunity. And when the price is moving down, 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 that's when you really want to get into a neighborhood. Only when the market changes, some significant event in the market changes, like let's say they found that the groundwater was contaminated. Well, all of a sudden, there's going to be price discovery to find out where it is that people are willing to step back in and buy. They say, well, the price is now $20,000 cheaper. I can put in a $10,000 water purification system, and now I will buy the price here, and then I'll wait the market out for when this big thing gets corrected, and I will be in at a good price. And the same thing happens when the market, they found, a shale deposit of oil underneath this neighborhood, and now everybody's going to be getting royalties. Well, the value of that property is going to increase. That's the same thing that happens in the market, right? The market is always searching for rotations, right? So remember this, the market moves from horizontal development, chop, to vertical development, back to horizontal development, and so on, just like that example that I just shared with you. The market will rally, it will pull back, the market will pull back, and then it will rally, as this two-way process always goes on to try to find out where value for a particular instrument is at a particular time. So again, the sole purpose of the market is price discovery. The market will rotate within a range of prices until a variable changes. Variables change all of the time, like those examples that we just used. And of course, we've got an election coming up here in a couple of months, and get ready for the dynamic and for some vertical price discovery as we go through the election period. All right, so what we basically talked about is why the market maker levels work, but just one more time, these rotations create a set of measurements that are based upon time and price cycles from previous trading sessions. These measurements are then projected forward and become the structure points for the day's trading session. And here's an example. We have Sierra charts. We also provide an indicator for NinjaTrader 8. And this is what you're looking at here is a Sierra chart. And you can see, just without going into any more detail other than just looking at this picture, the market rotated around this level, tagged this one, so rallied up just a bit, got that initial bounce all the way down to the level below, pushed back up, could not get to the level above, and just started doing this rotation of steps all the way down into these levels, and would have given you a very handsome opportunity depending on how you play it and the way that you have your risk parameters set, etc. But this is a good graphical representation of what those measurements will look like on your chart. We're about to go through some chart examples here, but that is what I wanted to show you there. Okay, before we move on, these are not floor trader pivots. While both sets of levels, floor trader and these market maker levels, were developed and used by floor traders, there are some very big differences in how price is measured and the levels are calculated. So I get asked this all the time. Aren't these just floor trader pivots? Well, the answer simply is no. If you take a look to the left, and you can Google search this, a standard floor trader pivot, to get to that kind of middle level there, the pivot point is the high, the low, the close divided by 3. Very basic, right? Take the high, take the low, take the close divided by 3. For the pivot, so for the resistance 1 and the resistance 2, or the S1 and the S2 below, there is a simple mathematical formula that gives you price information based solely on price. And again, same thing goes for the upper levels as well. And again, these measurements are basic in nature and do not take into consideration changes in market and price volatility or range expansion as it's occurring in real time. So let me give you an example. There are, and I'll use this on NinjaTrader here. We'll just take a look here at the NQ today, right? So here's your market maker levels on your NQ right now. So you have these regular trading hours. We'll talk about that in just a second. These are your overnight levels, and this is how the market responded around the overnight levels. And then as the market gets past the open, there's a set of rotations that go on inside of that we call the revision signals, right, or intraday signals. And so the market is responding to these dynamic changes that go on in the market. So you have your big picture structure overnight. Then you have after the open, right, that gives you structure points. And then you have these intraday signals that allow you to kind of measure the moves as the cycles are going on inside of those in a particular trading session. All right. So the final thoughts here, these levels will continue to work because trading is based upon human emotion, and even those programs that are algorithms, they're still written by human beings, right? These levels take advantage of the process of continuous price discovery and provide structure for the daily trading session. All right, we're going to go through a few chart examples here. First, we're going to talk about the ETH levels. That stands for extended trading hours, or also known as the Globex. These levels begin plotting at the close of the day session, or the RTH, or what used to be called pit session, and are valid until the close of the next day's pit session. And they provide structure points, support and resistance for the overnight. The RTH levels, those are also known as your pit session. These levels begin plotting at the open of the RTH session and conclude at the close of the RTH session. And they are the primary session levels that we use during what used to be called the pit session. All right, so let's go through some chart examples here now that I've kind of given you a brief history. First of all, we're gonna focus on the NinjaTrader 8, but I'm also gonna show you here what they look like on Sierra charts. Now, the main difference between Sierra charts and NinjaTrader 8, the main difference that I see is that Sierra charts are a bit more lightweight, and you have a bit more customization, the ability to customize your charts in Sierra. I'm going to show you some NinjaTrader 8, and they have its own set of benefits, but this is what these same levels look like here. In fact, you've got an interesting dynamic here today where the market opens up right on the RTH mid and has really never come back, right? So you got one little bit of slippage through the RTH mid, and in fact, if you come up here and chart calculator, if you just use that, went long and just use that as a target, that was 39 ticks, right? That was a 39 tick. And if you had your stop 10 ticks on the CL, right, which is, that's kind of a customary stay safe kind of stop, then this only went through, slipped through that level by 6 ticks, right? So if you had a 10 tick stop and a 39 tick reward, then that's a 3.9 to 1. You remember what I just showed you on that previous spreadsheet, that I look for about a 3.5 to 1 reward to risk, and that's about what you would have had there. And same thing here on the ES today, right? The ES opened up right here on top of this RTH signal. Now let's look here. That the distance there was about 5.25 points, right? So even if you said, well, I'm going to get in there initially and you got stopped out, the market gave you another opportunity right back over the top here one more time. And so you took, let's say you took a 2.5, 3 point stop on something like that. And I'm just going through here, and at the moment here, give me a second here. Then you had an opportunity here to do what we like to call kick the signal and pay the target. And that is what just happened up here. And that is a 48 point ES move that went from signal to target up here, right? And so you saw how the market just immediately tagged into that target location up here, right? If you spread this out and immediately rejected out of that zone, and this is a real-time market live going on right now, right this second, right? So there's kick the signal and pay the target, and that is a 48 point ES move. Even if you went down just to the next level here and you took a 3 point stop, you still had an opportunity for a 15, we'll call it 16 point ES move. 3 point stop, 16 point target. That is a 3 to 1. Actually, it's a 5 to 1 reward to risk ratio, right? Okay, so let's go through some of these chart examples here as we get through it. And then I got about 15 minutes left. So here it is on the ES. We just looked at this. Now, what you see here on, and this also worked for you on Sierra charts. You're just going to have to build it separately, but there is a box around these levels, and that box is the zone of influence that we use around these levels here, right? So if you entered here, right, and you said, I'm not going to have a stop until it closes below this area, well, there's 2.5 points, right? Now, if it closes way down here, you're going to take a bigger stop. So if you're a little bit concerned about that, then that would have been an opportunity to just take it and say if it pierces this level down below. Now, also I've added just a simple filter here. And so we'll go ruler. I've added just a simple 20 period average. There's nothing special about it. Pick your style and your speed. But once the market breaks through, comes back over the top, it's above that moving average. And you said, I'm going to enter here, right? And then my stop is going to be below that. That's 3 points. And then I'm going to ride it to the next level. That's 2.75 points. And then I'm just going to ride it to the level above. And that's a 16.25 point move, right? So that's 3. So that's 16 divided by 3. That's a 5.5 point reward to risk ratio, right? And so remember, one of the things that we talked about here is I've got a YouTube channel full of these, showing these in real time, just like I'm showing them here to you today in real time, right? These levels, this is what the levels look like in real time. So let's just scroll back, and I'm going to show you, I'm going to show you this. I took this screenshot yesterday, and sadly, well, not sadly, but my chart looks different now than it did yesterday. This is what it looked like yesterday, okay? And I've done some work on it, so the lines and stuff aren't all in the same places they were. That's why I'm showing you a screenshot here. Okay, so we had our overnight structure point here. This represents a previous area of value, right? So this was about 1 p.m. yesterday. I don't know if you can see that here on this chart. Let me do this. Can you see this was right around 1 p.m. my time yesterday, right? This level here is 60. This is 66.75. And so I'm going to go right back over here to the Trader View report. And I'm going to show you, this is, again, this is in Eastern time in the Trader View, but you see the entry here was 32.64 half, right? 32.64 half, 2 lots is where the entry was. And so it was just below the value area here from a prior session. Market rallies up into it. I get in right up here, and I had a little bit of wiggle room. So what my plan was to get in, and if the market comes back up and crosses back over the top of here, this value area, then I was going to look to, that's where my stop was going to be. So I waited for this to pierce back up through. I get in, never comes back up here, and I took it from kick the signal to pay the target. Now, I actually held on deeper than that. If you look here where I ended up adding to the position, I added at 32.47 half and 32.31. So once you broke through this ETH target here fairly aggressively, I was feeling pretty good about it. It came back up, checked that level several times, and then rolled over. So the initial stop was 3 points, and the end target was 4 lots at 32.26 was the final ending target there, right? But this is a good example of how those levels played themselves out yesterday for a very, very handsome ES move. All right, so that's what that looks like on the ES here today. We'll come back here. This is what that looked like yesterday. This was that same thing yesterday, right? So again, once the market broke through this 20 period average, we did some rotation around the RTH signal. And again, let's just push this back here, right? Market just flushed out all the way down through. And you can see here how it just like steps on a ladder, just went right through these levels. Now you say to yourself, well, what happens down here? Well, that's when you got to turn on the bigger, higher time frame levels. And once you turn on these higher time frame levels, you can see that the picture really comes nicely into focus, and that's kind of what we were looking at yesterday. And then of course you get a reset at the pit close, and then there's your ETH signal, and that is an interesting kind of demonstration here today. The overnight level could not rally through, and eventually all the way back down, right? So that's just kind of an interesting idea there as well. And you turn those off, and then you get into today's structure points. So that's what the ES looks like. Let's take a look here at the NQ. All right, so we'll turn on the overnight levels here on the NQ, and you can see here that the levels were adhered to pretty well, right? So structure signal could not get through. They continued to provide resistance into the overnight session, and then we came all the way down into the zone of influence here on the NQ, right? Got to within a few ticks, and then the market rallied, so we'll turn those off. We'll turn the day levels on. We stayed above that 20 period MA. That was a good filter to tell you to get long. And again, the NQ is a little bit fast, as you know, closes very small. In fact, this is about 54 half down to 45. So that's what is that, 9 points, right? So that's a pretty tight stop on the NQ. And then you went RTH mid to signal to kick the target. So if you had just a 10-point stop on the NQ, there's 150 point, almost 151 point move all the way up into the RTH target. And again, this is real-time example here today, and you found resistance again, just like you do every time you come to one of these levels. They are pause points, right? And so again, the market just continuing to rally up. I'll just scroll back one day. This was yesterday's sell-off, and again, same kind of idea, right? Steps on a ladder, come down right to the tick, pulled back into this level, and then sold off. And if you turn off the day levels and turn on the night levels, look at that, right? All the way into those structure points down at the bottom down there. So a very healthy sell-off on the NQ yesterday. I'll do a couple more examples here. We'll look at gold. I'm not a gold trader, but they do work on gold. And so if we turn off the day levels, look at the night levels here, right? Resistance, got a little bit of resistance up here, and then all the way back down, kick the signal, pay the target, found support down here, and then the market rallied. And then you got into your daytime levels, and look at this, right into this RTH signal. Boom, a small pullback, and all the way up to here's the signal, kick the signal, and just a couple of ticks away from paying into the target. Kick the signal, pay the target, right? That's the kind of the nomenclature that we use to help remember the way these levels work. And that is what you're seeing there as well. And again, this is in real time as the market is doing it today. And here it was yesterday's gold charts here. You found support. You could not quite make it to the level above. That's a pretty good indication that kick the signal, pay the target here is going to be in line. And that's exactly what happened. You went through, kicked the signal, and paid that target down below on gold, right? Couldn't get through this level here, and you found some traction here underneath this level, and off it went. All right, so that's gold. We did ES, and now let's take a look at the CL. CL's a little bit choppy today. And so again, here's that 10 tick zone around it here on the CL. And this is, like I said, this is a little bit choppy here, very choppy, right? And so again, remembering what context and structure is for the CL, again, this is very choppy conditions. In fact, we put out a trade plan every day, and let me show you this. And it's in this trade plan, which is right here, right? This is today's trade plan that we put out. One of the things that we said we would need to be mindful of when we start talking about context, big picture is sideways. Overnight session also sideways with a slight bullish lane. But this is a trade plan that we look at every single day. And so here's kind of the higher time frame, right? A lot of chop going on. Well, what did we see here today? What have we seen on the CL? Lots of sideways chop, right? So again, rotational inside this level zone, but here was the real key to today, right? Here's the real key to today. So you can use this filter. You don't have to, but let's turn it off here for just a second, maybe. There we go. We'll just make that not visible here for a second. And now, if you were just looking to get in, you're just going to take it. I don't advocate this, but I'm just telling you, there was an entry right at the mid, right at the open, right? That's a 10 tick stop right there to that level. And the best opportunity you might have had today was a 39 tick target, right? So what did we talk about? 3.5, 4 to 1 reward to risk ratios. That's what we look at as potential opportunities. And this give you excellent short and long opportunities, targets, and also your stopping location. Now the CL has been really choppy lately, but here's yesterday. This is an inventory day. So the market opens up, spikes up into inventory right into one of the market maker levels. And this is what we call the 9 a.m. to 10 a.m. swing zone. And then the market just sold off, just rolling through these levels here all the way down to the bottom. And that's the way it looked yesterday. And here's one more day here on the CL. You could see how it went from level, kind of rotated to level, and then back up again, right? And so remember, these levels work because they are measuring time and price cycle rotations in the marketplace. So I have about 4 minutes left here. So here's what we're doing here today. I'm going to throw this link into, and then I'm going to look at your questions here for the next couple of minutes. I'm going to throw a link into the free trial. You could sign up here on the for the free trial in our room. Come in, take a look at the levels on your own. You can do that and take a look around the website as well. And there is a link to the free trial. And so let's go here and see if I can get through the questions here really quickly. Let's see here. To register, okay, that's a different. Okay, do you trade the S&P mini future? Yep, you see that there. Let's see. That's a lot of the other guys' questions. My questions are going to be at the bottom, I think, here. So give me a second. Yes, okay. Do the levels update intraday if the market has big trends like yesterday on the ES? Yeah. So remember, I showed you those intraday levels here, right? So let's take a look at the ES yesterday. So that was a big moving day yesterday, right? And so you had a couple things you could use. This broke through all of those support areas. And then you had the overnight session, which gave you good structure points. But if you wanted to look intraday, then you can see where these levels kind of broke down intraday, right? So this represents where those levels were before the breakdown and the range expansion, right? Shows that. But the real key to yesterday was looking at those overnight levels. That gave you a lot of good support and resistance there yesterday. E-Trade, how would one build the charts in E-Trade? What you would basically do is I teach you how to draw the levels, right? So once you learn how to draw them, and by the way, it's a 10 course or a 10 video training session here. In fact, I'm going to throw this link in here to you and throw this link in here if I can. Give me a second. This is kind of the product page. You can take a look at the different products, et cetera, that are in there. But if you wanted to take a look at that, there is kind of gives you the breakdown here of the training courses, et cetera, right? I'm not really looking to try to sell you on anything today. I'm just kind of showing you how the levels work, but there's templates and training courses. And if you are interested in doing something here today, you could type in the code OTG 500. This is something that we're using for our 10-year anniversary. You could turn that off. It's normally $14.97, but if you added that coupon code of OTG 500, you'll see that the price goes from $14.97 down to $9.97. That's something that you could do here. Again, that's the way that pricing works. But really, I'm just interested in you coming in, taking a look as a free trial here. I just threw the link into the main chat area for the free trial, and I think I got about a minute left here, and I think we're out of questions. So with all that being said, thank you for participating with me here today. I certainly appreciate it. Are there any other questions here before we roll through it here? How to get the market maker levels for NT8. If you look into that room there, that room link there is a product page, a link to the product page. Just type that in, and if you use the coupon code OTG 500, you'll be able to see that as well. Yeah, Larry, thank you. And you don't see the link. All right, so do this. I'm going to type in my email address here to you directly, and you can send me an email here if I can get this done here. You know what? I'm going to type it into the main box. It's jason@mailotg.com. Send me an email, a link to that email. VB, I sent that to you in private, so you should be able to see that. It's jason@mailotg.com. And with that being said, I think I've run out of time.
Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci system. In this webinar, I will be teaching you how to trade like a hedge fund trader with Alpha Fibonacci system. But first, I would like to remind you, very important disclaimer, that myself, my team, and everyone at Fibonacci Trading Institute are not financial advisors. We are here to educate you, to empower you how to become professional, powerful trader. All the content of the products, courses, software, if for educational purposes only. All software demonstrated as is without any warranty. All testimonials from students are believed to be true. No one had ever been paid for any testimonials. And of course, I hope you recognize that trading any instrument is risky, and you never trade with risk you cannot afford. Let's start, shall we? In this webinar, we will cover key steps to trade like a hedge fund trader with Alpha Fibonacci system. We will go over multiple examples from day trading to long-term future stocks forex in current and prior markets. You will see how Alpha Fibonacci traders trade and how you can trade like a hedge fund trader with Alpha Fibonacci system. Briefly about myself. I hold multiple degrees. I came to US with practically nothing. With less than 8 years in US, I made first million. I continue exploring in business and medical field in real estate throughout the years until 2008. Crash 2008 changed everything. I started questioning everything about markets and I started seeing clearly that if trading on fundamentals and earnings worked, every person on the planet will be Bill Gates. It does not. I recognized clearly that market formed by Fibonacci. I developed first proprietary strategy. 2011 I started Fibonacci Trading Institute, Fibonacci Trading YouTube channel. Now we also have podcast channel where you can listen to alpha Fibonacci traders. I work with Wall Street traders. I work with hedge fund manager from JP Morgan to Middle East to Saudi Arabia, as well as I work with beginner traders who have very small accounts. I teach identical thing as I just finished in the class, and you will see feedbacks from my incredible students who are my friends for life. I travel the world meeting students. In this image, you see Forex hedge fund manager in Switzerland with whom I had an incredible dinner. You see hedge fund traders who are trading options in US, in Middle East, as well as you see retail traders who are trading identical system. This is a message I received recently from Carlton. As you can see, after meeting with me, Carlton stayed up whole night trading. Currently, he's trading for hedge fund, being up 7% in another account. So, and if you will listen to podcast channel, which I will give you the link later on, you can hear Carlton's journey. You can hear what he does every day to continue being successful hedge fund trader. Prior, Carlton tried for 15 years, spending hundreds of thousands of dollars. Carlton Trading this Alpha Fibonacci trading system, complete semi-automated system with multi-market scanner and proprietary Alpha Fibonacci software. This is strategic, precise, institutional trend system that removes speculation and allows trader to trade markets as strategic alpha Fibonacci chess. Here's the system right now in live markets. This is Dow. This is Dow futures in front of you. Days in advance were identified. This is reversal zone. Expect sell-off on Dow here. One word reversal zone is present. Intelligent alpha Fibonacci trader never, ever, ever buying near. These proprietary levels you can install on any platform you choose, on any instrument you choose, and it allows you to identify hours and days in advance, ultimate top, ultimate bottom on any time frame. So if now I convert this chart to 5 minute, which is very popular on any instrument you trade in day trading. This is your ultimate support point this morning at the open. As we discussed with students, this is your ultimate buy, correct? And if I bring to your attention this software, in addition to long-term Fibonacci levels, you will see clearly ultimate precision, which you also can see on our YouTube channel. You never ever ever short near support levels. You never ever ever buy near resistance levels. And all of this applies to oil weekly, pound monthly, Apple daily. You decide what you want to trade. And if I convert this chart to 15, identical formula remains. So if you understand where critical support is, if you understand where critical reversal zone is, you sleep very well at night, and you're taking your ultimate position with ultimate precision, as you will see on multiple instruments next. Trader who trades 5-minute chart can trade easily, daily, hourly, and monthly. And if I bring to your attention identical system right now on Amazon, what do you see? This is reversal zone where Amazon had been for the last 3 months. So why in the world would anyone want to buy here? This is where you take profits off the table. You are not entering into. Amazon, identical rally since the start of 2019, as you see on Dow. It's identical top, it's identical reversal, it's identical price action. If you can trade pure price, you can trade them all. And with Alpha Fibonacci system, you know this in advance. And that's the power of knowing price and Fibonacci only. So an incredible Jennifer raising her account by 70% during the worst market conditions because her husband Emmanuel brought her to the course. Guess who is starting their own hedge fund? This incredible couple. There is no limits. I am mentoring limitless human beings, limitless traders who understand that trading with institutions is the most important part of your trading. So let's take a look on what played out in the last few months, shall we? On S&P and Dow. Here is Alpha Fibonacci system during crisis on S&P as well as Dow. Dow selling off, sell-off in progress. There is no surprise. Intelligent trader knows everything far in advance. So when post-hold rally starts, there is no surprise where it's coming from. Price reached Alpha Fibonacci reversal zone. What does the intelligent trader knows? Institutions already buying on the way down. You never hear on the news that market rallying, because if market crashes 5,000 points but bullish rally 2,000 points, you only hear negative news. How does that make sense? Because top 1% makes the news. Top 1% creates the panic and negativity and buying market already. So if you understand how crucial these institutional buy zones are, despite the worst news, the worst panic, you never, ever, ever shorting near. You buying with JP Morgan traders. And when, during the worst weeks, we know many, many months in advance where ultimate institutional buy point will be on March 23rd, that's where bullish rally starts from. All in advance, never after the fact. So if you're trading with institutions, and not against them, you are not surprised where selling pressure coming from right now. It is very, very simple. Dow reached reversal zone. Profit taking is on. It's exact same formula on Amazon, on anything you choose to trade. If you can trade one, you can trade them all with Alpha Fibonacci system. Taking this first key step, trading without indicators. This is a class I just finished teaching this. Every single chart looks like this. This is what institutional traders do. They are not chasing indicators. They only pay attention to price. And if you understand that pound looks exact same way, you are not blocking your vision. If you understand that Apple looks exact same way, you're not blocking your vision. You will see why Apple collapsed next. 5-minute chart on S&P looks identical. You can trade one, you can trade them all. But this is a reason for sell-off traders. S&P reached alpha Fibonacci reversal zone, as Apple and Amazon have done. Response at 3200 is crucial, critical. This support is out. Ouch. This is next. Next. All in advance. Many, many months ahead. This is S&P mini future institutional chart. This is where billions of dollars traded. So if you understand how institutional traders think, trading only pure price with predictive precision of alpha Fibonacci method, you will never need anything else. You understand this support holding the key for months to come. We identified this since March. We are at the end of September. And that's the power of the system. On day trading charts, minutes and hours in advance, on long-term charts, days, weeks, months in advance. No stress, no speculation ever. No indicators needed ever. And that's two key components of the system: indicator-free price and proprietary alpha Fibonacci retracement. Across all instruments, nothing else is needed ever. So if you trade S&P with alpha Fibonacci system, you have precise stop, precise targets. There is no speculation. There is no random stop. There is no random target. Pure price that shows you volume, that shows you strength, that shows you weakness, that shows you with ultimate precision. Trading with alpha Fibonacci system is a stress-free trading. So 14-year-old Dominic knows that he will be a hedge fund trader and increases his account drastically. So can anyone. I teach him identical system as I teach to JP Morgan trader. It shows you the simplicity. Listen to Dominic's podcast on our podcast channel. His father Andy brought him to the course. System is not complicated, it's pure, it's precise. If a child can become successful, if a child knows that he will be hedge fund trader at the age of 14, you can do this. This shows you the simplicity as traders share it daily in every class. As you can see, Andy is sharing my 14-year-old son trading using only AFS system. Other traders you can see trading options, stocks, bitcoins using identical system as traded by JP Morgan trader I mentored. That's it. You will never need anything else, only this on any instrument, any account, any position. You identify, do you want to trade gold or do you want to trade SPY, Bitcoin, XLM? Or do you want to trade option? If you can do 64 for 64 trades, if you can trade maximum 8 hours per week to absolute maximum 10, 20 hours per week, that's all you ever need. Go golfing. That's the power of institutional trend, precise alpha Fibonacci system. It applies to any platform, any account, any instrument. Trader of any level can trade it with ease. Here's Alpha Fibonacci system on Amazon 2018. Amazon stock mid-trend years in advance, you know where Amazon reversal zone will be. So when Amazon starts selling off, no one is surprised. How is it possible? Amazon comes out with spectacular earnings. Amazon in free fall, selling off $700 per share. And when Amazon retraces back up to reversal zone 2019 again and selling off another $400 per share, no one should be surprised. All of this after excellent earnings. This continues non-stop. Excellent earnings do not matter. Alpha Fibonacci reversal zone does, where you can buy Amazon at the bottom. Identical system on 5-minute chart. This is S&P right now in live markets. This is the bottom. So if you decide to trade 5-minute chart, this is S&P on 5-minute chart from ultimate bottom to ultimate top. Charts are twins with Amazon. And if I convert this chart to 3, would you trade better if you knew precise entry, precise stop, precise target? If you knew that this is not the place to enter, you can trade them all. How would your trading be if you knew that this is not the place to short? This is your trading range on S&P for the last hour. Ultimate precision during the worst market conditions. Charts are twins on Amazon and any time frame on S&P. Bullish rally exhausted. Sellers are weak. Sellers stuck at support. And that's the power of the system. They let you buy the top, sell the top, and shows you what never to short into. That's it. You can trade one, you can trade them all with Alpha Fibonacci system. So here's another student shares in the room. Bitcoin cryptocurrency very popular, as you can see. Scott is a hedge fund trader trading alongside with retail traders, trading Bitcoin, trading stocks, trading options. Every trader different instrument, as can keep updating us 82 for 82. You decide what you want to trade. Choice is yours. As Ken says, tips is magic. Fantastic work, everyone. This is power of community of Alpha Fibonacci traders. And this is what Scott has done, taking his hedge fund account from 4 million to above 6 million in a couple of months with Alpha Fibonacci system. You can do this on few $1,000 account, as many traders do all over the world. You will see next where you can find much more, as students keep sending me emails time and time again with their performance. Second key step, strategize as institutional traders do. Identify institutional trends and ranges prior to placing a trade. Successful trader trades only with institutional trends. What would your trading be if you traded with institutional power? Ask yourself that question. So this is a bullish rally on Dow. Bullish rally is done. It's over. Market in correction. Wall Street waiting for election. Knowing how to prepare for historical election is crucial, because instantly markets will change. Let me remind you what played out with Alpha Fibonacci system during last election 2016. This was S&P rally prior to election. As you can see, subsequent targets next. 4 months prior to election, S&P pulling back. There is no surprise. Decision point 1 is the end of the minor trend. It is ultimate brick wall. Night of the election, spectacular vicious buying. S&P skyrockets to the target identified months in advance and heading higher and higher and higher, reaching Alpha Fibonacci reversal zone 2018. Where did the market reverse from? Ultimate Alpha Fibonacci support. But you knew this in 2016, when you knew where price will head to after the election. It's identical level. That's the symmetry. That's the power of the system. So day trading, not your cup of tea. Use options, use long-term positions, as traders do all over the world. Choice is yours. Is it 3 minutes? Is it 1 minute? Or is it long-term position investing, as billions of dollars traded on this chart? Understanding what institutions do will forever remain the most important part of your trading. With Alpha Fibonacci system, it identifies all in advance. never ever after the fact. And this is S&P right now, months and 10 days before election. We are very, very clear what to expect. No stress, no panic, ultimate precision with institutional power, with institutional trends. And that's what traders trade at institutional levels with very little time, with ultimate opportunity. One of the recent trading morning lasted 2 minutes. As you can see, traders share 26 points on Dow's, 3 on S&P, 30 points, boom, trade day, 2 minutes. Scott prefers to trade futures and options on stocks with Ken on Bitcoin, with Jean on very different instrument. Every trader different account. Every trader different time frame. Every trader who makes an effort becomes ultimate success. Trading identical system from $500 account to 5 million to 5 billion, all in the same room. It shows you what's possible with Alpha Fibonacci system. Trading pure price for entry and Fibonacci for exit. You will never need anything else. This is rule-based entry. This is rule-based target. No speculation here. Nothing is ever needed again. Only this. And when oil reaches ultimate bottom 2016, let's take a look what played out. As I work with hedge fund manager in Saudi Arabia, to whom you can listen on our podcast session. Oil reaches ultimate bottom 2016, reverses with vengeance, reaching the end of the minor trend. This is a problem, as you saw on S&P prior to the last election. So when 2 years later oil doubles in value, you know far in advance where reversal zone will be. And when oil starts selling off from reversal zone, you know years in advance. I show this in the class where zero on oil will be. This is oil during historical crash 3 years later. You know in advance oil heading to zero. Everyone in shock. How is it possible? We know that oil will continue existing. Is zero possible? Yes. This means opportunity to buy the bottom, which is what Saudi student did, celebrating his profits time and time again. This is the power of the system, allowing you to short the top and buy the bottom with ultimate precision. Now oil in trouble, frozen at the end of the minor trend. Oil been at alpha Fibonacci resistance identified many months in advance for months and months and months. It's exact same thing that played out on any chart you choose to trade. It's exact same thing. An identical reversal on 3-minute S&P. You can trade one, you can trade all. Pullback on 3-minute lasted 10 minutes. Pullback on 1 minute showing you to the tick. Price is identical no matter what you trade. The only difference, are you holding position for a couple of minutes, for days or weeks and months? You decide. Choice is yours. That's ultimate precision on any instrument, any time frame. Third key step of the hedge fund trading. Identify your trading range prior to placing a trade. Every single day, trading range varies. Market conditions change daily. Last few weeks is a perfect example. Let me remind you what the markets looked like in the last few weeks. When Dow starts skyrocketing and rally is setting up, this is a breeze. This is what child can trade. You are buying the pullbacks. You are not touching any shorts. The biggest vertical rally with institutions is on. Top 1% just became 25% richer. You cannot find yacht for sale. You cannot find plane for sale. The biggest profits despite the worst crisis is a stunning lesson. Trade with institutions as a hedge fund trader is the only way to trade. And you know months in advance where institutions will be taking profits off the table. Now it's a mild profit taking is on. Trading is very challenging, extremely challenging. But if you know many days in advance that this is your ultimate buy zone, and if you exiting your long here, you've been done long time ago. You're not staring at the chart. You're not staring at the screen for hours. You are trading as hedge fund trader, not a gambler. You are riding Goldman Sachs train. And this is the reason students are so grateful. This is from class I just finished. This is brand new team of hedge fund traders. This is keeps coming non-stop. This is new student. I want to let you know that I really enjoy your program, all the content you put together, and the great atmosphere. Your work provides a whole new view on the markets for me. There is no surprise, all precise. If these traders can do it during the worst market conditions, accomplishing 87% win rate, and the worst trader can become the best trader ever, so can you. What is stopping you? All of this in the last few days. I can give you thousands and thousands of emails and testimonials from all over the world that you can find on our website. I will continue uploading all I receive. On our podcast channel, you can listen to traders time and time again. One of these traders, or many of them just like you, struggled for many years, spending a fortune trying every indicator on the planet. If they can do it, so can you. And that community of incredible traders all over the world, some of whom sponsored by Top Step Trader. This is hedge fund performance from 100,000 to 4.8 million with Alpha Fibonacci system. But if you're trading small account and you've been trying for 20 plus years, not a problem. That's what it looks like a year later with Alpha Fibonacci system. That's it. Simply make an effort. You will never need ever anything else. That's the reason I mentor Wall Street traders who never need another indicator again. Because if you know months and years in advance, minutes and hours in advance, where to buy, where to sell, you are not gambling, you are not sweating, you are not stressing, you are trading with rules, with ultimate precision. And that's what played out at very difficult trading range in very difficult markets time and time again. All of this only recently. And we are in the worst market conditions ever. Every trader, different account, different instrument. From 3.5 point on gold, 8 point on gold, 3.5 S&P, 48 points on Dow, 35 points in Q, 2 points S&P. Her husband Emmanuel brought Jennifer to the course, Scott trading crypto and more and more and more, nonstop every single day, utilizing synchronicity of multi-market scanner. This is what scanner looks like. You wait for your trade and you wait for alert. You're very well prepared with institutional trading range, with institutional bias. You're not flipping the charts. You can scan with the scanner markets in seconds. You're trading stress-free as hedge fund trader. You understand that you have zero interest in being majority that keep chasing indicators forever. Answer lies in you. And that's what traders proving every single day. Alpha Fibonacci system with community of supportive, like-minded traders with established system, with experienced mentor is all you will ever need. So if you come to the website, this is annual event we are setting up for. Annual Genesis Trading Bootcamp. This event will not repeat until at least 2023. So if you come to the homepage, please read and understand that all 4 options, all group courses, all software comes with additional Genesis trading system. 10 days from October 26 to November 6 will be historical trading event as market will change from the worst to extreme volatility instantly. An intelligent trader will take advantage of this. So if you click on Genesis Trading Bootcamp detail, you will see we have only 5 spaces left. Give it a moment, please. A video explaining what to expect in bootcamp also posted in this section. So all of these additional features, Alpha Fibonacci Genesis Trading System Savings 2000, Alpha Fibonacci 10 days live trading bootcamp value of 2000, Genesis video library, all of these additional features added to 4 options. 4 options live group course with video library, or 6 months private mentoring includes annual general trading bootcamp. So if you want to trade like a hedge fund trader, that person is right next to you in our community, supporting each other. I promise. In this bootcamp, I teach to you much more than I taught to JP Morgan trader, than I taught to Saudi Arabian manager. You can listen to them here. You can view videos of the system here. You decide what you want to trade. You decide what platform. You decide what instrument. If you want to trade with software, software for Ninja 8. Method globally traded on any platform. No software required. Any questions? Do not hesitate to pick up the phone and call, or send me email with your number 925-257-4298 or info@fipinstitute.com. It's been my joy and pleasure to present to you. Thank you, traders, so much. I look forward to seeing you in annual Alpha Fibonacci Genesis Bootcamp. This event will not repeat until at least 2024. Only 5 spaces left. So let me give you the links, traders, and let me see if you have any questions. I believe we have 2-3 minutes. One moment, please. Here's our YouTube channel where you can see thousands of videos. And here's our contact us page where you can see the email and the phone number. My joy and pleasure. Trying to see. So, ladies and gentlemen, unfortunately, I'm trying to see a question. Hold on. Now I can finally see it. Hold on. Oh my God, that means the world. So one of the traders just posted this. This means the world. Thank you so much. My eyes are opened and my mind is free. My lifetime goal of becoming master trader will be realized. I love it. Thank you, thank you, thank you. Means the world. Yes, it works on Thinkorswim, as you see clearly on our homepage. It shows any platform, multiple traders on Thinkorswim. What determines decision point 1 or 2? You need to learn the course. It is not something I can teach on the webinar. Yes, you can use it on Sierra charts on any platform, traders. It's posted on our homepage. Do you see the description? All other platforms, anything. If it has Fibonacci tool, you can use it anywhere you choose. So I hope I answered as many questions I possibly could. And that's my joy and pleasure. Yes, we have multiple traders on TradingView, on Thinkorswim, on MT4, on any platform you can possibly imagine as it's spelled out on the homepage. All platforms. Trade anything you choose. Yes and yes and yes. That's it. And what determines decision point 1 and reversal zone? I teach in live classes. This webinar is done. This is not a class, and next presenter is ready. But that's what I was teaching in class before the webinar. So if you join us, you will learn it in class and you will view it in hundreds of videos. Thank you so much, everyone. Thank you. Bye-bye.
And thank you everybody for being here. My name is Norman Hallett. I'm going to show you a little bit about my background, but before I do, I just want to tell you how excited I am about presenting this to you, because this is a new presentation based on work that I've been doing for the last 18 months with my latest simple trading plan. It's called Loaded Gun, and I'm going to show you why it's called that in a second. I'm calling, for lack of a better term for the results of this trading plan, I've called it swing scalping. I tried to combine the two names like scalping and swinging, but it didn't work out. So I decided to stick with swing scalping for now, so that you know what it's about and know what it can do and what it has done for the last 18 months. And I'm going to show you just some statistics. I'm hoping from the last few weeks. I'll be able to tell it to you. I won't be able to show you on the screen. It's still in worksheet form, but I will say that I'm very glad to be here with you, and let's get on with the presentation. My name is Norman Hallett. You've probably seen me around for a while. I too have a YouTube channel with about 209 4-minute drill for traders. You see, I concentrate for years, for my career, on the mental and emotional issues of trading. And in that, with respect to that, I also realize that most traders try to avoid it for several reasons, none of which is less more obvious than not wanting to face oneself as a trader. And I understand that it's a hurtful thing to be moving stops around and jumping off your plan and then admitting that you did so, like you did yesterday, the day before, and the day before. They just can't seem to stop. But you'll get tomorrow, it will all be better. Well, generally, traders there are a lot of struggling traders that have blown out 3, 4, 5, 6 accounts, and somehow have been trading for 10 years and say they have 10 years experience, but what they really have is 1 year experience 10 times. Until you change the way you approach this from a mental and emotional standpoint, you will be in the 90% of traders that lose. You see, the 90% of traders that pay attention to the traders that pay attention to the mental and emotional issues, that's about 1 out of 10 if you're lucky. So 90% pay little or no attention to the mental and emotional issues, let alone train their mind a few minutes a day to achieve the proper behaviors when they trade. That kind of matches, I believe, exactly the number of traders who win and lose. So 90% of traders lose, 90% of traders pay little or no attention to the mental and emotional issues. I believe they are largely connected, if not identically connected. There are a lot of good trading plans out there. What I did, what I started to do after training traders for 20 years on the mental and emotional issues, we realized that many of the traders we were training to stick to their trading plans were sticking to trading plans that were lousy, that were just terribly constructed, had no vision of risk and money management, and therefore they were losing. And we were helping them to lose by making them disciplined to a lousy trading plan. So a few years, about 5 or 6 years ago, I went ahead and backed up and started teaching and writing books and papers on building a proper trading plan. You see one of them there. So I think that one's still available I've written several books on it. That one still is on Amazon, as well as a couple of other books and maybe videos. But I I am passionate to relate the importance of that to you. And in that passion, I'm now building what I'm calling simple trading plans. These simple trading plans, of which I'm offering just one now, and that's the loaded gun because it's the best of all of them. These simple trading plans are simple to run, and they all fit on all of the rules, entry and exit fit on one sheet of paper. Also on that sheet of paper, examples of triggers and so on. It's very easy to understand, and it's something that you can go ahead and implement without involving a lot of mental and emotional compassion around. I'm going to show you what I mean in a sense. So if you can have a simple trading plan that's not looking at a million things and has a million conditions before you get in and out of a trade, and it still works, and that's what I'm going to show you, then you've got a trading plan that not only is a good trading plan to make you money, but it's also one that you won't jump off of because it's a simple trading plan that encompasses the simplicity that allows you to stick to it. Okay, just a little bit about me. I did spend a little time with Payne Weber. I put it first, even though I spent 2 years with them. I was a commodity specialist with them, but didn't really like the way big firms like that ran. It wasn't really a fit for me. Previous to that, I ran one of the largest, if not the largest, options firm in the country for about 8 or 9 years with ITG. It was that was in the 80s. In fact, it was my work there that Payne Weber took a look at me and said, "Hey, would you consider coming along with us?" So the experience that I had with International Trading Group is an experience where I was in one room. I had 60 traders trading the markets. I noticed that those traders that had simple trading plans, one with 1 or 2 or 3 conditions to get into a trade and 1 or 2 conditions to get out of a trade, they were the ones that were making consistent money, and they were always active. Those with the charts that said, well, all you need is 1 or 2 good trades, and that may be true, but the frustrations of waiting for something to happen, the running out of patience, something with the complicated trading plan made those group of traders much less effective and productive and profitable than the ones that had simpler trading plans. That's where, and I can't believe I waited 10 years to implement that idea in general, but I'm doing it now. The Hallett Group was, when I left Payne Weber, I formed my own firm that managed, I was a commodity trading advisor, managed millions for deep pocket individuals. And that was a good time for about 5 years. I traded through my own IB Hallett Commodities, but my most rewarding and most passionate experience has been through the disciplined trader, helping traders with the mental and emotional issues, and now delivering simple trading plans, of which I'm going to give you a great deal on one now that will not, it'll be a price that you won't believe. So you'll be able to try it for 60 days guaranteed. And if you don't like it, I will refund your money in a happy way, because I don't want any stress in your life. So I want you to try it with no risk. I'm going to show you what that looks like. But let me give you the idea of what's behind what I'm calling swing scalping. Okay, the number of traders in this country and around the world have skyrocketed. Baby boomers are looking for extra income. Professionals that have been displaced by COVID-19. I guess I should put a D in there instead of an N, epidemic. There are a lot of new clients coming to me where I'm so glad they're being referred by other people who've been with me for 10 or 20 years. And those, I can help those people get off to a fast start because I'm going to help them with the mental and emotional issues as I'm helping them with the trading. And if you can have that kind of package, you can succeed quickly. And there are extremely low interest rates. When there are extremely low interest rates, you can't make money anywhere else. So there are a lot of traders, a lot of people, individuals that would never thought that they would be looking to make money through trading, whether it's through the pandemic, whether you're a baby boomer retired looking for something, whether you just can't, you're tired of making 0.25% on your savings, then trading becomes an alternative for you. But we have to remember that in trading, the strong traders take from the weak traders. Those that make the mistakes, those that chase markets, those that move stops around, these are the people that I make money from, because I have a strong conviction about where I buy and sell, and I don't bend it for nobody. So, and you should be the same way. Once when you start trading, there's no changing your trading plan when you're trading. You change your trading plan on the weekend, at the end of the day, after you're trading. But while you're trading, you can only go by the rules that you've maintained as the proper rules from your past experience up to that point. Now, those people that have my book, I've downloaded several 100,000 copies of one of my books that concentrates on trading plans and not on trading plans, but on managing risk. And in that book, there is a quote that traders shoot for high frequency of winning trades with targeted profits, usually small ones, and immediately and without hesitation limit losses no matter how they feel about a trade. In other words, it's always about limiting the loss. Keep the losses small. Numerous successful small trades can add up to impressive annualized gains as long as the losing trades are nipped firmly and quickly in the bud. You got to stop the losers. You know, most traders, I know a good friend of mine, trader that made, I think it's made 12 to 14 million this year. I thought it was 12, somebody corrected me to 14. And he will get out of a trade, as I do, quickly if it's not working out. He doesn't waste time because there's always another trade that can work out. So nipping your losses, nipping your losing trades firmly and quickly in the bud is the key to trading. Which takes me to the types of trading that there are. There's scalping, there's swing trading, and there's position trading. Now, scalping, of course, I wasn't much of a scalper until I developed this system because, and in a second I'll tell you why I did that. Scalping, you're in a trade for anywhere from 5 seconds to maybe 3 or 4 minutes, but usually not any longer than that. You take a quick profit on an impulse move. You're banking on impulse moves that have quick attention in your direction, and you're grabbing that trade, the profit. The swing traders are traders that are willing to stay in a trade a little bit longer. Most swing traders do get out of the market by the end of the day. They trade off 5-minute charts, 10-minute charts, sometimes hourly charts. And some experienced traders do hold, especially if you're a futures trader, you can hold till the next day because there's only about an hour where you're not trading and know what the market's going on. If you're trading shares of stock, holding overnight has a very big risk for you. I don't recommend it really as a swing trader because it can close one day one time, and at 9:30 Eastern time the next day, it could be wildly at a different price and be very hurtful and blow through your stop. So swing traders generally are out by the end of the day. Position traders are the ones that take on long-term positions. They believe in technology. They like the leaders like Apple or Tesla. They'll buy it and they'll hold it, and they plan on giving it to their grandkids. That used to be position trading in its total definition, but now, of course, position trading with the markets as fast and voluminous as they are, position trading can actually last a week or 2 or 3 weeks, but most of the time it's a much longer issue. Scalping and swing trading are what we're going to concentrate on today, and I'm going to give you the advantages and disadvantages. The advantages of scalping: generally, small prescribed losses. When you set up a scalping trading plan, you're usually looking at least a 2-to-1 or 3-to-1 type of an affair. And in other words, for when you win, you win 2 chips. When you lose 1 chip. That's the risk reward, and it usually is the same as far as the number of, and if you have an equal number of wins and losses, you're going to do very well in a system like that if you can get through mentally the losses, because sometimes there are 3 and 4 losses in a row, and that could make you shy to take that 5th trade, which could have been the winning scalp. Now the other advantage is trading with limited time to trade can complete trade. We also do some coaching, and on our one-on-one coaching as a trader, I'm specifically thinking of that only trades from 9 o'clock to 10 o'clock in the morning. He's got another job that he's a very successful sales manager in a very high-end firm, But he loves to trade. He's about 5 years from retirement, and he wants to learn now about trading. So he's learning with me, and he's trading a lot of what I'm about to show you, and as he's been impressed with this. In any event, when you've got limited time, scalping is good because you're in and out of a trade quickly. It can also be good with swing trading, but not quite as within that definition. So there are a couple of advantages. Some disadvantages are that by prescription, you have small wins. And also chop can result in chewing up your equity without the possibility of a large gain to overcome. In other words, when you're dealing with a trading plan like in the other two types of trading, swing trading and position trading, you can be there for bigger moves. And you're not there for any big moves with scalping. You're constantly taking short impulse moves. And chop can hurt you unless you've already identified the range at which is chopping and buying near the bottom of the chop range and selling near the top of the chop range. But that usually doesn't happen until you have 3 or 4 losses in the scalping. So I wanted to give you those positives and negatives of scalping, and also to emphasize that there is a psychological challenge, which is at the root of everything that I create. When you're a scalper and you take a scalping profit, which is again small by prescription, traders come to me and they constantly say, and in the trading rooms I used to run, I don't have trading rooms now, but in trading rooms I used to run, I do have trading rooms now, but not on a scheduled basis, and it's only for members. But the psychological challenge of a scalper is they are constantly saying, I could have had a much bigger profit if I had stayed in. So they're taking small, and then they see a huge move down by the S&P of 100 points, and they say, wow, I took 3 points and I could have had 30 times that. I wish things were different. But I'm a scalper, and that's the way it is. As far as advantages and disadvantages of swing trading, advantages, you've got the opportunity for the larger gains, because in most swing trading, you have your stop in after your initial purchase, and you're leaving the top open. You're using a trailing stop either under 1 or 2 the lows of 1 or 2 bars previous, or maybe you're using a volume type or a volatility type measure in order to measure the distance from the stop. So there's a number of ways, but you're allowing the market to run with a protection underneath. Okay, so that's a big opportunity for swing trading. Traders with limited time to trade can also complete trades during that situation. Okay, and during being a swing trader. Disadvantages, you can often give back a profit before offsetting. Many swing trading results have shown me that a market can, when you have a big impulse move and you put your stop underneath that big impulse move, you can give that whole thing back, and you do quite frequently with swing trading, and that can hurt. As well as when you're wrong, generally your stops can be deeper and the larger losses are possible. So although you're giving yourself an opportunity for the large gains, the emotional toll can be great as the market comes back and takes away what you had but didn't take it, because you're not a scalper, you're a swing trader. You're letting it ride, letting it run, and then the market backs up on you. The psychological issue there is that you say to yourself, man, or woman, if you're a woman, and most women are, I find, better traders than men. I'll say it right now because they're more patient, but men who trade and have patience are just as good. So you can say to yourself, man or woman, if I had just taken that profit. You see the market go up, you put your stop underneath, you put your stop at break even, the market comes all the way down, hits your break even stop, where you could have had a nice short gain if you were a scalper, and you say, boy, if I had just taken half that profit when I had the chance. So there are psychological challenges to any type of trading. But what if there are a way to combine the benefits of both scalping and swing trading? What if you could have the benefits of having small prescribed losses? And remember, I'm a stickler on small prescribed losses. If you have a trading plan with small prescribed losses, you have a lot more trades that you can get to. And if your trading plan is even decent, where you can say after back testing and forward testing that for every two winners there's one loss, you can do very well if you just keep those losses small. Okay, take small gains frequently. That would be an advantage of a combined scalping and swing trading. You go ahead and take, but at the same time, you're also giving yourself an opportunity for large gains. And I'll show you how that's going to happen. I'm going to show you the trigger and everything in a second, literally in a few seconds. Avoid account draining as choppy markets. So you're not going to be caught in the kinds of choppy markets that you can be caught in with just scalping. So you can take short gains, those impulse gains, plus you can be there and have the opportunity for the large gains. Okay, and now let's get into the loaded gun trading system, which I am urging you to give a try on the 60-day guarantee. What you're looking at is the trigger for the trade. This is the simple trigger for this particular simple trading plan. And I want to, in order to stick to a trading plan and not waver and not let emotions get in the way, you must really believe in your trading plan, that if you followed it in the long term, it will work. And every time you take a loss, it's the same loss as doing business. You have to frame your trading as a business, even if you're part-time, then it's a part-time business. But to say to yourself, I'm trying to trade, I'm thinking about, I believe I can be a good trader. In your mind, you have to be a successful, disciplined trader right from the start. Maybe you're going to fake it till you make it in the very beginning, but you're not going to fake the trading plan that you're going to have and the layout and what you're going to stick to. What you're looking at here is a reason to believe. This is a reason to believe that when you take a trade, you have an excellent chance of being successful. And last week, there were 22 trades on a 10-minute chart in the S&P. Whether you trade the E-mini or the micro S&P, the E-mini contract. And again, this works on currencies, on FX contracts, on combinations, on it'll even help you to decide whether to get in and out of an option and judge where the premium may go based on this trigger. And I'm saying to you that I'm going to describe what this trigger is. I think you can see what it is on the outside. Okay, what we're looking at is two candles, and this could be any time frame. This system works on any time frame also. I suspect that you already know that smaller accounts should probably be trading smaller time frames, and the larger accounts can be trading larger time frames. The larger, if you trade a 240-minute bar, then you're going to be taking these. Then you're not going to be a swing trader. You're going to be a swing trader, but it won't stay within the bounds of a 1 day of trading. Okay, let me show you then what I'm looking at. This is a candle. They're both candles, but this is a candle, and I'm going to tell you. I'm going to describe what a candle is, not because I know, because I don't think you know it, but because I don't think you know my position on candles and why I love them. When you see a green candle, it means the open, which is the bottom of this body, not here, but the bottom of the green box. This is the open, and this is the open, and this is the close of this 10-minute period, which this bar was created. These wicks on the bottom and the top, sometimes there are wicks and sometimes there aren't, usually some sort of wick. And these are trades that occurred outside the open and close. Now, you can't see what happened during this. You can't see if the market went up and then went down, chopped around, hit the top, came all the way back down. You don't know when the high and low were made, but you do know that the open was here and the close was here. This is important because the Japanese, who 3 or 4, maybe I think it's 500 years ago, I forget the number, I think it's 300 years ago, the Japanese farmers who constructed the cold candlestick theory and believe that, and they saw it as an emotional component of trading, of buying and selling. And they believed that the only thing that was important was when you bought and when you sold. Everything else was noise. And if you chunk that theory down even to 10-minute bars, the theory is still valid, because those that trade 10-minute bars are considering every 10-minute bar. Those that are looking at daily charts, like the Chinese probably were, or monthly or weekly charts, they care about where the market started in that time period, where it ended in that time period, and that is what the importance of the body of this candle. Okay, so it's important to understand that, simply put, a candle reflects the emotion of the market, not only the pricing, but in many ways what's happening emotionally during that time period. So here on the previous 10-minute candle, this also took 10 minutes to create. You notice that it's red. That means that the open was above the close. It opened here and closed there. In other words, it was a down period between open and close. Now, in this particular case, this is called a spinner because it has a very small body compared to the length of price action that happened during that 10-minute period. So you've got an open and a close here of very shallow. Okay, if the open and the close were exactly the same, this would look just like a cross, a line here and line here, where the open and close were exactly the same. That's called a doji, and it's the perfect symbol of indecision. Indecision, which is why most trading books will tell you it may be signaling a change in direction, and that's true. But I'm not looking at that in this particular case, although in large part I am. That's not the reason that I bring it up to you today. What I look for, and the reason this is an important trigger, is the fact that this is indecision followed by decisive, a strong decision being made. When that happens, indecision, strong decision, and it goes through the 8-bar exponential moving average, which I have not drawn here. I'll show it to you in the chart. That means you buy at the close of this candle. So when this candle closes, or the first tick of the next candle, when this is your buy point, the close of this candle. Okay, so indecision followed by decision through the moving average. Okay, a specific moving average. I use the 8-bar exponential moving average. I'll tell you why later, if I have time. Again, another explanation of you have to believe what you're doing and why you're doing it before you can do it with confidence. Okay, so now I want to now use what I've shown you here in a chart. Let's take a look at. And I'm going to take a look. Let's take a look at some of the work that I was doing. I think I mentioned to you that I was doing work with the. Trying to move this window here. Let's take a look at these are the way I look at charts. This is the micro S&P, and I'm going to try to move this again. Let's see if I can move the whole window. Kind of won't let me, but what is this button here? That's not it. Let's do it this way. That'll do it. Okay, I'm sorry for the confusion, but I wanted to make sure that you saw this. All right. Let's take a look at what I'm looking at here. This is the S&P. This is the micro contract. It has enough volume. It trades exactly the same as the big contract. And I'm moving along because I want to show you some of what I marked up. Let's stop right here, because you can take any chart, any time frame, any market, any currency, and do what I'm about to do right here. Look at this. You're looking right here at a trigger, at a short trigger. You have a spinner, which is a small body, and I teach you how to recognize what a small body is and what it isn't. Sometimes a lot of it is in comparison to the explosive decision candle, okay, which is here. This is the opposite of what we saw before. This is what we saw. Look over here on the bottom right and over here. It's a common pattern that I think you're going to see. The small body, okay, extension, you'd be a buyer here, okay. Small body here. Even though I like to see a smaller body, this extension is is a nice extreme compared to it. But the fact that it's checking a double bottom, which I show you in what I call nuances in the course. In the course, it's a very short course, and there's no video longer than 15 or 20 minutes. But I show you nuances that you can add to the simple trading plan. The simple trading plan fits on one piece of paper, as I mentioned, and the nuances are changes that you can make. They're optional, voluntary changes that you can make that will only increase your ability to win bigger without ever increasing your risk more than just a tiny bit. Okay, so the nuances, and one nuance is to look around. And you'll look at this, right? We're against the double bottom. We see a trigger, the trigger that we like, indecision by decision through the moving average, and now we're long here. Okay. Now, what I want you to do, and why I call this method swing scalping, is that you're not buying one position here. You're buying two positions. Now, in a micro contract, if you have a $5,000 account, you can easily buy two micro E-mini E-mini positions, or micro position, I don't know what the heck you would call them, but two micro positions, okay, in the S&P. And what happens is a 1/10 contract to the E-mini, okay, so every tick is $5, every point is $5, not $50, okay, so it's easy to manage, but you'll be surprised. In last week, if you took all of the 10-minute signals in the S&P, you would have made $800 using starting with two of these little E-mini contracts. So you can make money with this if you follow, even in a small way. If you were a large account trading $25,000 last week, by the figures that I don't have time to show you, but I did show everybody the other day, yesterday, on a presentation of my clients, that they would have made on a $25,000 account $12,000 and $12,700. But that's if you traded from 6 at night to 5 in the morning, 5 in the afternoon the next day. Nobody trades that. If you trade only from 7 o'clock, say, to 4 o'clock, then you would have had literally exactly half those profits. So it doesn't matter what time of day you trade, this particular situation works. Okay, so you buy two here, all right, based on what the loaded gun trigger, and I call it loaded gun because it looks like the handle of a gun and then the barrel of a gun. It's a lousy name, but I think maybe it talked about the explosiveness, but with, you know, gun violence and so on, I'll probably wind up changing it at some point, but it looked like a revolver. So indecision followed by decision through the moving average. Then what you do is you buy two here. Immediately, once you buy two, you put your stop in to sell two, a tick below this particular, whatever this formation is, whatever the lower of the formation is, you put your stop below that to sell two, okay? And the next thing you do is put a limit sell in to sell one, sell half your, if you bought 10, you sell 5. If you bought 50, you sell 25. You sell half of your position. In my example, I bought 2, I'm selling 1 at an equal distance to the extension. So if I measure this extension as I'm going to look at it right now, it's about 10 points, okay? If I measure the extension at 10 points, I'm putting, in this one, let's say that we closed here at, when you bought with at 34. So at 44, so at 3344, you're putting your limit sell in right here to sell half of your position. This is the scalp half. So you would have been out with this bar right here out of half your position. When you take that half out, when you sell the first position, you immediately move your stop from down here to a tick. I like to put a tick above break even, because even if it comes back and hits me, and I only get 1 tick, to me, I got 2 winners, and not just a break even and 2 winners. It's a psycho thing that I do with myself, but I do everything to keep myself positive. There's enough coming at you with trading, and I'm the disciplined trader, I know. So what I'm telling you is this is important that you understand that you buy 2 here, you put your stop down here, you sell your first one at the limit order that you're putting in that equals the extension of whatever it is here, you add that extension here, you're selling 1 here, and then you're riding the next one until you exit. And I cannot, right now, I can't tell you, it's too complicated in this period of time to tell you the exit plan, but it's also simple, and there are a number of different variations, because in trading, it's easy to get in, but it's those that can get out consistently and the right way that make the money in trading. Getting in is easy. I used to take a challenge where, you know, there used to be a person that sold real estate. I forgot what his name was. It'll come to me, but I think he wore a cowboy hat. He sold real estate, no money down real estate. He said, drop me in the middle of any city in the country and give me a driver's license and $20, and I will own a property within 24 hours, where he would find somebody to finance it and go for it. I can tell you that generally, if you put me in any trade, I can get out very gracefully. I may not be able to make money if you really screwed up, but I can get out in the best possible way. Okay, here's another. Look at this. Here's another signal, right? You're on the north side of the 8-bar exponential moving average. Your movement is your doji. This is not a doji, but it's a spinner because it's a small body, and it's a small body here, followed by a move through the exponential moving average, and you're selling to here. Immediately, you put your stop up here, a tick above. The next thing you do before you even take a drink of water is to put your limit buy in here, okay, for half your positions, and then you're following once you've filled on this, on your scalping position, you're moving your swing trading position down to a tick below break even in this case, and you're moving here. And in our system, you would have been out right here in this area right here. So you would have had the second position here. Okay, here's another signal right here, of which you would have had your scalp position, and you would have actually written this down also. So you can see how effective this is. But the important part, of course, is to help you in getting out. And I can do, you know, I do it in the same simple way I'm doing this. But here's last week's. Here's some of the things that I marked up. Okay. Actually, I moved from the September to the December contract. So, but here's what happened for. Let's see if there's any other. I guess there's no other days here. I guess it only gives us a week and then goes, but I'm not seeing the beginning of the day. But here's see this out here. Apparently, I was in something from up here, so this probably was a nice trade. But here, right here, small indecision. In fact, 2 days of indecision followed by a movement through the exponential moving average. You've got now. You may or may not be able to take this trade because, again, I teach you, you've got to measure your risk. And if this amount of risk, when you sell to here and the market backs up and stops both positions out here without taking the swing trade or the scalping trade profit, then you're going to have to make sure that's below 2% of your equity, if not less, 1.5 to 2%. You don't, and if it isn't, then you don't take the trade. Now, there are some nuances that I teach you where in a situation like this, sometimes the market will back up and stay below this moving average, which still makes it a good trade with a lot less risk. So sometimes you can get lucky and catch a trade that's within your risk parameters that weren't in the beginning, but then were when the market backed up a little bit, didn't cross the 8-bar exponential moving average. In this particular case, I was out here. Of course, the interesting part about this one is that and it's true of many of the trades you'll take, that the scalping position, if you did take this trade, you measured this and you put a limit buy here. That scalping trade, which you took out and made a profit here and then moved your stop to break even, and then got out on this candle right here. This was a very short, from down here to here, looks like about 3 or 4, maybe 5 ticks. That was a lot less on your swing trade than you made on your scalping trade. So in fact, in last week, out of all the trades, there were 170 points made on this 10-minute chart. On the swing trades, 173.75 points, and on scalping, it was 81.75 points for a total of 255.5. Okay, so I'm saying to you that, and here I was teaching, so don't worry about that right now. But I just wanted to show you that here's another trigger. I mean, look at this. This is a very easy trade to take, and I'll tell you why. You've got a nice bar here, and generally when you see, and in my experience, I can give you a lot of help maybe in something that you don't know. When you see a hammer is this looks like this actually looks like a shooting star that should be up here, but it's down here. When it's down here, it's a very positive thing, even though it looks like it tried to go up but failed. When you see these near the bottom, it usually is an indication as well as something like this that wound up being a pretty good indicator that the bottom may be near. And what happened here is that, and you're against the double bottom. This is a very, very easy trade to take. I also show you how to use an RSI if you care to preview some trades. Okay, so you see the indecision followed by decision. You buy two here, you'd be selling your first half over here. You'd be riding your, and you'd be moving your stop to break even. You ride your position up, and this is one. This happens to be a reverse position, so you would be getting out here in this particular case. So your second position would be from here to here, actually bigger than your scalping trade. But then you'd be taking money out this way. You'd be taking money. Here's a trade right here. So it happens. In fact, this trade right here was a nice trade, a short scalp, because this is a very low body, small body extension. And some of my people, and they would be rightfully so, may argue that this is not a big enough extension, and they may be right about that. But I put it in here anyway because of a few other things that I teach. But again, the fact is that although it is a small extension, it's also a very small risk. This right here would be something that you have to deal with the nuance. But again, another signal here. So there's a lot of signals. Let's look at today's trading, and then I just want to show you. Well, we're almost done. So I hope that shows you a little bit more about what this kind of thing could do for you. I want to show you how to get a hold of the simple trading plan loaded gun. Normally it's $497. Actually, it's a lot more than that. It's 4 times that. But I've been running like a COVID kind of let's get going. I have so many new clients. I want them to have this one. I want them to have loaded gun. And so I'm giving you a coupon code. So write this down. So go to simpletradingplans.com. Simpletradingplans.com. Your coupon code is 100 STP. Simple trading plan, 100 STP, and you can get $100 off. For you, it's going to be $397 to learn this complete simple trading plan, and you're going to get 60 days to work with it. And if you don't like it, I'll give you your money back. But before I do, let me show you then once you become a member of the Simple Trading Plan Loaded Gun, you'll be logging in. You'll see there's several videos on explaining chart by chart by chart about how the loaded gun works and how to apply it in its simplest form, which is what I did without many nuances that improve on that chart I just showed you, and all the results I've just stated used very few nuances. So, which even improve results. Here are nuances that I'm constantly adding, and our members are constantly suggesting as they're even working with it. As you work with a trading plan, you recognize different things that maybe could help. So we've got, not only does the basic trading plan help, but you've got nuances that are over and over again. And there's 7 of these, I think, right now. I'm putting up 3 more over the next week or 2. So as we get to them, you'll be seeing them. When you go to simpletradingplans.com, Simple Trading Plans, it's plural.com, you'll be taken to the sales page for it, and there's an explanation of it. You'll read other people that have been working with me for a long time and how they've turned their lives around. And listen, you've got to, I didn't do it for them. They did it for themselves. I can just show you, I can lead you to the water, but you got to drink. And the fact that all of this lives on one page, this is your simple trading plan right here. It's very easy to live this. And I show you everything that's included here. Normally it's $19.97, but I've been running this over 75% special here for the COVID, since COVID, but I'm going to go even deeper for you people, because I love Anna. I love the people she brings. I learn from the people she brings on. I learn from the way, the integrity that Anna runs her business. So don't stop here with learning about trading. Just keep watching Anna's stuff. She's always got great people on. I give you that guarantee I talk about. But when you get down to, it's the best picture of me that I ever took. And as you get down to the place where you commit to go ahead and try it for 60 days, here's your coupon code where you're going to put 100 STP, and it will say your coupon is accepted, and you'll have $100 off, and it'll only be $397 for you. So that's really about it. I know I've kind of gone over time, so we really don't have any time for questions. There is a question nerd down here. that it's inert right now, but as soon as this is over, I'm going to jump on there for you. And if you've got any questions, ask me on the site. Just go to simpletradingplans.com. Do my best to answer. There won't be any of my people that monitor. I will answer any questions that you have. I really want you to try this. I didn't mean to talk so fast, but I had a lot to tell you, and I really hope that you're ready to go with this and give it a try. Thank you, Anna.